Welcome to This Explainer. Today, we're diving deep into Valero Energy Corporation's Q2 2026 earnings report to uncover exactly how they pulled off an absolutely massive year-over-year profit jump. We're going to jump right in because what we've got here isn't just your standard run-of-the-mill financial update. No, this is a fascinating look at a company firing on literally all cylinders across the entire energy market. Let's break down the numbers, the operations, and the strategy behind this explosive quarter.
Let's hit the ground running with the absolute blockbuster number from this report, $3.7 billion. That is the net income attributable to Valero stockholders for just the second quarter of 2026 alone. Now, you know the world of energy and refining, right? Margins can be notoriously volatile. So pulling in nearly $4 billion in clear net income in a single quarter, that's an incredibly rare level of performance.
To really wrap our heads around the sheer scale of this, we need to compare it to last year. In Q2 2025, net income sat at $714 million. Fast forward to Q2 2026, $3.7 billion. We aren't talking about a modest 20 or 30% bump here. Profits literally multiplied more than 5 times over in just 12 months. It's absolutely crucial to anchor ourselves to this visual before we even start breaking down the individual business segments that made it happen.
So how in the world did they pull this off? Well, CEO Lane Riggs hit the nail on the head. He noted, "We are pleased to report a strong second quarter, driven by excellent operations and commercial execution across all 3 of our business segments." I love this quote because it grounds all that data. It perfectly sets up what we're looking at today. This wasn't some random fluke of the market, and it wasn't carried by just one lucky division. It was driven by 3 distinct, highly synchronized operational engines.
All right, here's our roadmap for today. Number 1, record-breaking results. Number 2, the refining powerhouse. Number 3, green accelerators. And finally, number 4, the vault and horizon.
Let's kick things off with Chapter 1, record-breaking results.
You know, when we see billions on a spreadsheet, it helps to zoom out and picture the actual physical reality behind those numbers. Valero is a vast web of infrastructure. They're running 14 petroleum refineries across the US, Canada, and the UK. But on top of that traditional infrastructure, they've got a renewable diesel capacity of about 1.2 billion gallons per year, plus 12 large-scale ethanol plants in the US mid-continent. When you see those record profits, remember, it's being generated by the relentless daily output of these sprawling industrial complexes.
Pulling straight from the official source data, that $3.7 billion in net income filters down to a highly impressive $12.62 per share for the quarter. If you track energy equities at all, seeing earnings per share leap over $12 in a single quarter is just a textbook example of real value realization.
And get this, Valero didn't just sit on all that value. They practically backed up the truck for their stockholders, returning $2.6 billion in cash this quarter. To put that into perspective, that represents a very generous 59% payout ratio of their adjusted net cash from operations. They declared a regular quarterly cash dividend of $1.20 per share, rewarding investors directly while the company rides this incredible wave. Moving right along to Chapter 2, the refining powerhouse. Now, the operational leverage here is just dramatic. The refining segment's operating income skyrocketed from $1.3 billion in Q2 of last year all the way up to $4.5 billion this quarter. This segment alone is basically the bedrock of their overall corporate profits. When the market favors refining margins, a company with Valero's massive footprint captures that upside at an exceptional scale. I mean, they essentially tripled their operating income year over year in this segment alone. But to truly grasp the size of this win, you have to look at the physical volume. They hit these numbers by maintaining throughput volumes of an astounding 3 million barrels per day. Every single day, 3 million barrels of crude and other feedstocks were safely processed through their systems. That relentless, high-capacity utilization is exactly what generated that $4.5 billion operating income. All right, let's shift gears to Chapter 3, green accelerators.
For a long time, the broader market kind of viewed alternative and low-carbon fuels as, side projects or futuristic bets. Well, not anymore. This is a definitive turning point. Last year, the renewable diesel segment reported a $79 million operating loss. Fast forward to this quarter, a $717 million profit. That is nearly an $800 million positive swing in a single year. It proves their low-carbon strategy is way beyond just regulatory compliance. It is a highly lucrative commercial operation.
And grounding that $717 million profit in reality, the renewable diesel segment achieved an average sales volume of 3.8 million gallons every single day. They are successfully manufacturing and marketing these low-carbon fuels at an industrial scale, tapping straight into growing global demand and securing excellent margins while doing it.
The green acceleration definitely doesn't stop with diesel either. Their ethanol segment explosive growth as well. Operating income here multiplied from $54 million last year to a whopping $318 million this quarter. Literally every single dial in Valero's alternative fuel portfolio was turned up to max profitability. And just like their other segments, it is all backed by crazy physical volume. Ethanol production averaged an incredible 4.7 million gallons a day. That steady, high-volume production across their 12 ethanol plants was absolutely critical in meeting market demand and locking in that $318 million profit.
Let's wrap things up with Chapter 4, the Vault and Horizon.
If you want to know how much cash this machine is actually printing right now, look at this one number, $5.6 billion. That's the net cash provided by operating activities in this quarter alone. Even if you adjust it and exclude favorable working capital impacts and their joint venture members' share, it's still a robust $4.5 billion. This gives Valero a massive reservoir of liquidity to maneuver, invest, and keep returning capital to shareholders.
Now, despite all that cash flowing in, they are managing their capital structure incredibly conservatively. They ended the quarter with a remarkably low debt-to-capitalization ratio of just 11%, net of cash. Plus, they're sitting on $7.9 billion of cash on the balance sheet. They carry minimal leverage, proving they're in an incredibly strong, defensive financial position that really protects them against future commodity price swings.
CEO Lane Riggs summed this up perfectly. He said, coupled with our differentiated balance sheet, these strengths position us well and provide significant financial flexibility. Basically, combining record operating profits with an extremely low debt balance sheet means Valero has total freedom right now. They can fund capital projects, reward shareholders, and strategically invest in future growth without breaking a sweat.
So where exactly is that financial flexibility going? Well, on the immediate horizon, they highlighted the $230 million FCU unit optimization project at the St. Charles refinery. This project is specifically designed to boost the production of high-value products. It's fully funded, it's totally on track, and it's expected to begin operations in the third quarter of 2026, which means we're going to start seeing returns on that investment very, very soon.
Which leaves us with this final thought. Valero just posted a quarter of truly historic profitability. Their green energy segments proved to be wildly lucrative, and they've got an optimized refinery project coming online in just a few months. But, as we all know, energy markets are dynamic. They shift constantly. So as we look toward the second half of 2026, the real question is, can Valero maintain this unprecedented operational momentum? It is absolutely going to be fascinating to watch. Thanks for joining me on this explainer, and as always, keep learning.